Welcome to The Explainer. Today, we're going to demystify the world of investing. Seriously, by the end of this, you'll have a clear map to understand how to make your money start working for you. So, let's just dive right in.
First things first, let's talk about the money you might have just sitting there, in a savings account. It feels pretty safe, right? But here's the thing, it's actually in a race every single day, whether you know it or not. And here's its main competitor, inflation. It's that kind of sneaky, gradual increase in prices that just eats away at the value of your money over time. I mean, a dollar today just doesn't buy what it used to, right? That's the race your money is in, and just saving it, that's not going to be enough to win. Investing is how you actually get ahead of the curve. So what is investing really? Let's get a super clear definition down because you can't get to your destination if you don't even understand the journey itself. At its very core, investing is a pretty simple trade-off. You're taking money you could absolutely spend right now and committing it with the clear expectation that it's going to grow. It's all about sacrificing a little bit now for a much bigger reward down the road. And yeah, this slide just illustrates that whole exchange perfectly. On one side, you put your capital to work, and on the other, you've got the hope, the expectation of a return, that your money is going to multiply. It's an active process of creating wealth, not just, storing it. Now, this is absolutely critical. We've got to draw a hard line between investing and its riskier cousins, speculation and, straight up gambling. They're not the same thing, and knowing the difference is just so important for your success. This table just lays out the core differences beautifully. See, investing is long-term. It's based on what we call fundamental analysis. That means you're really looking into a company's financial health, its business model, the whole shebang. The goal is to build wealth over time. Gambling, that's a short-term bet based on pure chance. An investor makes calculated decisions. A gambler is just rolling the dice. Okay, so we know investing helps us beat inflation, but what other major financial goals can it help you now? Let's take a look at some of the destinations you might be heading toward on your own financial map. Honestly, investing is such a powerful tool because you can hit multiple targets at the same time. Just like the slide shows, it can help you generate a whole new stream of income, save up for those huge life events like buying a house or paying for an education, and it just grows your savings. In some cases, it can even help lower your tax bill. It's really all about building a more secure financial future for yourself. Every journey needs a vehicle, right? Well, in investing, these vehicles are your different investment options. So let's look at the main types you can choose from to carry you toward those goals you've set. So your options pretty much fall into three main buckets. First up, you've got fixed principal investments. Think savings accounts or government bonds, where your initial investment amount is pretty secure. Second, there are variable principal investments, like stocks. These have way higher growth potential, but more risk because their value goes up and down with the market. And finally, you've got non-security investments, which are actual physical things you can own, like real estate or gold. This chart gives a really great snapshot of how some of the popular options compare. Now, the key thing to notice here is the relationship between risk, return, and time. See how higher risk investments like stocks usually need a longer time horizon. We're talking 5 years or more to kind of smooth out the market's ups and downs. On the flip side, lower risk options like fixed deposits offer more predictable, but more modest returns. All right, now let's talk about the process. How do you actually do all this? We're going to walk through a proven roadmap that can guide your entire investment journey, from your very first step all the way to ongoing management. Okay, the single most important thing to see here is that this process is a cycle. It's a loop, not a straight line. This is not a set it and forget it kind of deal. As the diagram shows, you start by figuring out your goals and how much risk you're comfortable with. Then you move into analyzing and valuing things, building your portfolio, and finally, and this is key, you are constantly monitoring and reviewing its performance, tweaking things as you need to. It's a dynamic, ongoing thing. So for anyone just starting out, please don't get overwhelmed. Just focus on these first 4 steps. They are the most critical. Be crystal clear on why you're investing. Be brutally honest with yourself about how much risk you can actually handle. Then, choose a mix of investments that lines up with those first 2 things. And finally, just commit to checking in on your progress regularly. I promise, if you get these right, you'll be building a really powerful foundation for success. So we've covered the why, the what, and the how of investing. You have the map, you understand the different vehicles, and you've seen the roadmap. The next move? Well, that's up to you.
If you take just one single thing away from all of this, let it be this. Successful investing is not about getting secret stock tips or just getting lucky. It's about creating a thoughtful plan that's based on your personal goals and then having the discipline to stick with it.
So, we've given you the framework to get started. The only question left is the one that you have to answer for yourself. Now that you have the map, what's your first destination? Just thinking about that, well, that's the first real step on what can be an incredibly rewarding journey.